right, now let's take time to shine the spotlight on Bitcoin. Don't say it. Bit of a skeptic.
I'm a believer now, I'm a believer.
Yeah. Now, since the beginning of the year, Bitcoin's value has more than doubled with a 130% rise so far. Where to next? That is the question. And can he tell us? Matt Harry, fund manager at Digitalx, live from via Skype. Great to talk to you this morning.
Great to be here, guys. Thanks for having me back. I always enjoy our conversations. And yes, a lot has been happening in Bitcoin land, and it's very interesting to hear that Ingrid has become a believer. I love that. Fantastic. So I think when we last spoke, the market was sitting around $16,000 US.
Yeah.
At that stage, I said if we started to close higher timeframes above 16.5, then we probably had a fairly straight shot to the next resistance level around 19,000. That move has eventuated. We have pulled up just shy of 19,000. Technically, the market still looks very, very healthy. We're seeing higher time frame RSI on the monthly back above 70, first time since 2017. So that indicates the bulls are still very much in control of price action. There is a word of caution, though. We are seeing pretty heavily skewed global funding rates to the positive side in derivatives markets. So what ordinarily happens when we see that is we tend to get a bit of a pullback. If that pullback doesn't eventuate, then look, there'll be a little bit of resistance at 20,000, which is the all-time high. But we're really looking towards $22,400 as the next breathing point for Bitcoin. And we're really starting to see now this whole inflation hedge narrative starting to gather pace. This week alone, we've seen people like Ricardo Salinas, who's Mexico's second wealthiest man, come out and reveal that he holds 10% of his net wealth in Bitcoin. We've seen Citibank release a target for the Bitcoin price, which Ingrid will be very interested in, for 2021. They believe we can get to 318,000 US dollars per Bitcoin. That's in the next 14 months. And also BlackRock has made some pretty interesting comments in that they have said that they believe Bitcoin can challenge gold over time as a preferred store of value or inflation hedge asset. So those Wall Street voices that really started as a trickle have now become a real river. And it seems that even those that are standing on the sidelines are edging closer to the playing field. And so until I start to hear my barista, because I am a Melburnian and being a Melburnian necessitates that we have a barista, until I start to hear my barista espousing the virtues of Bitcoin as an inflation hedge or store of value asset, I will consider that this market has a long way to go yet.
I mean, it is hard to ignore, just seeing the trend and what we've seen in Bitcoin. As you say, inflation hedge. Talk us through this and I guess what this means for next year. I just always like to ask about the drivers of Bitcoin. And I know I've asked before, but for perhaps new viewers who are watching, can you just talk us through that?
Yeah, absolutely. So during periods of higher inflation, investors tend to look for scarce store of value assets in which to park their wealth. Given the current macro environment, which I'm sure all of your viewers are aware of, this QE Unlimited or Infinity as they call it, which is pretty ridiculous in itself, and the ECB PEP program, basically around the world there is currently being an enormous increase in monetary supply. Now, there's a few who may argue that in a post-COVID environment, we may see a period of deflation in the short term, but I don't think there are many that would argue that longer term, these super easy monetary policies pursued by central bankers aren't incredibly inflationary. So you contrast this with Bitcoin, whose scarcity is baked into its code, and importantly, it has a known and decreasing issuance rate over time. And you start to see why many investors are seeing Bitcoin as a great alternative deflationary asset in the context of, I guess, this monetary policy madness that's being pursued by central bankers around the world. Now, traditionally, this role has been fulfilled by gold, but we see gold, BTC or Bitcoin, as being superior to gold in its store of value attributes. And even from a relative scarcity perspective, so that's on a stock to flow basis, Bitcoin is set to become more scarce than gold within the next 3 years. So as a result, we see it attracting a proportionally larger percentage of capital over the coming years.
So, Matt, obviously all the focus on Bitcoin, but we shouldn't forget about those other cryptos, such as Ethereum, which has surged. How do you compare the two then at this point?
Look, they're very different type of assets. Bitcoin really is the store of value of the digital asset world, and Ethereum is more the building blocks for decentralization of finance and other types of services. So they are very different. When you refer to cryptos, there are thousands of what we would term cryptocurrencies. We don't look to invest in cryptocurrencies. We're looking for solid digital assets. So we're looking for things that have adoption and real value in a real world. A lot of the cryptocurrencies, a lot of the decentralized finance protocols or tokens really have very low adoption at this point. They're very much unproven. And many of them have a bit of a smell of the 2017 ICO craze about them. And we believe there's enough topside in Bitcoin really and Ethereum to not expose yourself to greater levels of risk in those other cryptocurrencies, as we call them.
All right. Pleasure to have you on the program and taking us through it. We'll look forward to chatting with you again. Thank you.
Been great, guys. Thank you.